Well, welcome back to QwmBQ Live. If there is one interaction that I think most people want to hear, that's from the management of Symphony. It was punished in trade yesterday after the fourth quarter numbers, missed estimates on all counts. The stock is under a small bit of pressure in today's session as well. Let's talk about this performance and the broader implications of this performance and the performance of FY18 on the larger air cooling system space as well. Achal Bakeri, the chairman and managing director and the founder of Symphony, joins us right now to talk about this. Mr. Bakeri, good having you. Thanks so much for taking the time out. This is Neeraj here. Good morning.
Good morning.
Is it becoming a bit difficult to combat the seasonality in this air cooling space and the industry as well? Because over the last 6, 7, 8 years that I've been actively looking at this business, we haven't seen these chinks in the armor come in such a pronounced way and with such a recurrence. I mean, is that happening, and is it because of a higher base or more seasonal fluctuation or increased competitiveness? What's the reason here?
Well, it could be all three, but as per our judgment and our understanding, it is primarily because of seasonal fluctuations. And we have seen this in the past. You know, we have seen it as early as back in 1997 when we had a summer like this, you know, which was fairly, a washed out summer. This year, it's just not Symphony. I mean, it's all other market players that we know of, whether in the air cooling or the air conditioning space, are all facing the same issues. So it is very, very clearly, an issue of the summer just not being consistent and not being hot enough across the country. There are certainly pockets which are hot. For example, Ahmedabad, where we are, is currently 44 degrees, 43 degrees. But the vast parts of northern India have had an erratic summer, interspersed with thunderstorms and rain and whatnot. And even the south, where a lot of our sales comes in the months of February and March, also faced a similar situation. So to a great degree, I would say 70-80% of the impact is because of the seasonal fluctuations, and maybe part of it is because of, far more intense competition than it was in the past, and to some extent because of, GST and the demonetization and all of those sort of hangover of those sort of factors.
You reckon it might become very, very difficult and challenging to predict what could happen over the course of 12 months because of these factors? I did, read the call transcript, Mr. Bakeri, and Rupesh Shah was mentioning that the weather has played spoilsport even in the ongoing quarter. Therefore, is it a lot more challenging to now predict a continuous, predictable growth that you used to predict in the past? 20-25% used to be par for the course for Symphony. Is it becoming a lot more challenging to be able to predict that internally as well, forget externally?
No, I wouldn't say that. If you see just the past 12 months, the April to March, September 18 period, although we had a bad quarter, the last quarter, but we ended the year at a marginal growth, practically no growth, but a marginal growth. So what we have been doing over the years is even out our sales cycle so that our dependence on the core summer season is greatly reduced. So by selling significant amount of coolers of our production in the off season, thereby insulating ourselves from the fluctuations in the summer season. In the summer, in those quarters or in those months, it is the trade which basically unloads their inventory and then come back to us to replenish. That cycle didn't happen this year. So although in our estimation the whole industry has actually degrown, we have had a minor growth, so which is not too bad in the given circumstances.
I want to take a big picture scenario as well, but first, getting a few things out of the way. Can you break down what Q4 and FY18 top line was in terms of volumes as well as pricing? Because margins have held out. Am I to assume that pricing has remained steady or probably gone up a bit?
Pretty much steady, and may have gone up a bit in some models, and the model mix may have had an impact on the overall per unit contribution. Our margins, at the overall level have remained pretty much the same. In fact, have again marginally gone up. What important thing is the important factor that needs to be noted is that for the first time this year has Symphony's consolidated profit after tax been greater than the standalone. All these years, our international subsidiaries, be the one in China or the one in Mexico, were incurring losses, and therefore the consolidated profit after tax was less than the standalone. Now we have turned the corner. In China, the loss has been is a quarter of what it was when we took over the company. So we have every year in the last 2 years we have kept on halving the loss. And in Mexico, there is a profit, and which is why now at the consolidated level, the profit is higher than the standalone profit. At the top line also at the consolidated level has gone up to by about 16% or so. So I think while the domestic business has been under pressure because of seasonal variations, but all in all, as a company, I don't think we have done too badly.
Okay. I will talk, I wanted to bifurcate this interaction into domestic and international. I will come to the international piece as well, Mr. Bakeri.
Yes.
Just a couple of questions. Your margins, as you said, they've grown slightly. How come margins have expanded in what has arguably been a challenging year? Is it because of internal cost controls or the benign raw material environment, or what's really worked out for you?
No, the margins have been pretty much the same because the pressure has not been on margins. The pressure has really been on sales. So even at a lower margin, it's not as if we would have sold more. It's just the fact that the weather didn't support the whole industry, and which is why the tertiary sales, the actual consumer buying at the retail level didn't happen. So margins have not been an issue. The issue has only been the sellout at the retailer level.
No, the heartening part, and therefore my question, Mr. Bakeri, would be that if indeed margins have expanded marginally at that, but expanded in such a challenging year, are we to assume that this is kind of a new normal on a consolidated basis for Symphony on the operational front?
You can say that. You can certainly say that. If not, it will only improve.
Okay. For the first time, Mr. Bakeri, before I get to that, any thoughts, any outlook that you would want to share with us on pricing as well as margins? I think margins, you're saying that FY19 you would probably maintain this or better this. What about pricing for FY19?
Pricing also really shouldn't, materially change from the past. There is always, nothing new, but we always sort of have, remain competitive, and we have our pricing strategies. So there will be that, but it will not really impact the overall bottom line.
Okay. And just a small breakup, cursory at that, between industrial and residential cooling, and what do you expect? What's the aspiration, Mr. Bakeri? 5 years out, the share between industrial cooling and the non-industrial cooling?
5 years out, the share of industrial cooling would be significantly higher than it is now. At the moment, within India alone, at the consolidated level, it is much greater, but within India, it is less than 10%, which we believe should be significantly higher. I would hesitate to put a number to that but it would be the way we are working, the way we are planning, the way we look at it, it should be significantly higher than it is now. And that is another factor which will help us in evening out seasonal fluctuations, because the industrial cooling segment is not really, very sort of dependent on the season. And a factory owner is going to cool the factory regardless of the summer. He's going to do it well before the summer. So the industrial business, in our experience, whether in China or in Mexico, isn't that prone to seasonal fluctuations. And I would believe that the same holds true for India. So going forward, once our industrial sort of pieces are falling in place, and once we pick up momentum, it should be significantly larger and would significantly help us sort of insulate on ourselves from seasonal fluctuations.
You reckon pieces could fall in place by the end of FY19? Early FY20, you should be completely in sync with what you want to do on the industrial cooling front?
No. FY19 would be a little too soon. It would be probably 20.
Yeah, I was asking end of FY19, maybe beginning FY20. You think that's a good timeline?
I would say sometime in 20.
Achha,
I would say sometime in 20.
Okay. One question on a point that you mentioned about maybe GST-related issues, and probably Demon played a part sometime in the last year, but are GST-related issues still impacting the smooth operations? And part two of my question would be the whole belief that the space tracking or the analyst community tracking your company and the space is that GST transition from informal to formal should all aid companies such as yours, leaders such as yours. How is that pie of the puzzle playing out?
Unfortunately and unexpectedly, that is not quite happening. The cash business or the unorganized sector is thriving as it was before. So GST hasn't really been able to plug all the loopholes that they had intended to. Hopefully, the e-way bill should be able to do that. But again, it remains to be seen to what extent that is effective. In our country, I think people, are very ingenious and they're able to find ways around every sort of regulation that is framed. But so GST hasn't really worked out the way it was expected. All of us had expected it to. And not only in the air cooler industry, but I'm seeing that across categories. The number two business or the unorganized, the informal sector has really not been dampened as was expected.
Okay. Let's wait for some evidence there. Lastly, or rather, the last piece of this interaction is all on the international business. Now, Rupesh Shah, I was reading the con call transcript yesterday. He was speaking about Symphony embarking on the third phase of its life cycle, so to say. He described the first two phases. Now, can you tell us what the change Symphony would look like? As I have understood, phase two was marked by remarkable improvement in return ratios and operational parameters, and indeed the growth for the company as well. Now that you look to embark upon a different piece, which is the international business in a meaningful way, you've given a release about a possibility of another acquisition as well. Can you tell us if that is the integral part of Symphony 3.0, and how would that Symphony compare to what's been the Symphony for the last 5 or 6 years? Return ratios, margins, sales growth, etc., etc.
Symphony 3.0 would be significantly more international. Would see significantly more international revenue, part of the revenue, and would also see significantly more industrial cooler sales, being a part of the revenue. Again, as far as the ratios are concerned, we, expect them to be by and large the same. Wouldn't see a material change in that. But, a significant portion of our sales should come from international and from industrial business.
You are confident that an expanding size and diversification will not bring the challenge of a normal downward curve to return ratios and margins over the course of the next 5 years?
No, we don't believe so. We don't believe so because the margins are a function to a great degree of our business model, and because of our innovation pipeline, which keeps on delivering products which excite the market and which command a premium in the market. So we have products at different points in the life cycle. We have some new products which are exciting, high tech, which generate the margins, and then we also have some older products which deliver the volumes. So this kind of a combination, this kind of a play of new products, high margins, and older products, low margins, which give the volumes, that will continue over the foreseeable future.
Okay. Can you tell us anything about this new acquisition? I don't want details because that would be divulging strict information, but are you looking to acquire or make a strategic acquisition which gives you entry into a geography, or are you buying a healthy asset because it is available? Any details that you can share?
This is going to be a healthy asset, unlike the past two acquisitions that we've done. So this is a healthy asset. again, in a geography where, we really don't have a significant presence. So this is, if this deal does go through, it will be a significant sort of boost to the top line and the bottom line.
Okay, I wouldn't want to ask you more on that. I have one last question, or two last questions, Mr. Bakeri. If I just look at the last 4 or 5 years of wherein Symphony has had a large, meaningful international operation, and please correct me if I'm wrong with the timelines, but I'm just using 5 years as a barometer. Your revenue performance, and correct me if I'm wrong again on the numbers, I think FY13, 105, 110 crores if I'm not wrong. At the end of FY18, about 180 crores. Yes, it is become a sizable part of your overall business, but at a CAGR level, the growth hasn't been probably the way that the market expected, or maybe even what you would have liked it to be. Are these because there were teething issues, because these acquisitions were distressed and now they're getting resolved? And if that is the case, do you believe that the international ops, organic, what you have right now, could show a much better CAGR growth number? Because that's a natural de-risking model that you have to the Indian summer and the Indian weather fluctuations, I think.
That is true. However, the existing acquisitions or existing operations are in mature markets, and where those economies are growing at a much slower pace. Like for example, Mexico, the economy grows at 3% and they are very happy. So, and most industries over there, if they grow in in the high single digits, they'll be very happy. So in those conditions, we don't expect that to grow at 25% or 30%. But in the anywhere between 10 to 20% kind of a growth we would consider to be a fairly good growth.
You would presume that would be the ballpark growth numbers for the international ops over the course of the next 3, 4, 5 years as well.
The existing ops. The existing ops.
Yes. The new one, the inorganic moves notwithstanding, the existing ops about 10%. Okay. Last question. Again, you may not be able to give me a definite number, but from the current 20% rest of the world versus the Indian operations at 80%, do you see that skewing considerably in favor of international? Because I heard you mention that 3.0 is all about international operations. Will that be significantly skewed in favor of international revenues?
Very much so. Very much so.
You don't have an internal number in mind?
We do, but let's talk about it in 2 weeks' time. Okay. It's a little premature to talk about that.
Okay, fair call. Then I won't press for it. We'll look forward to talking to you probably once you have culminated a deal. And we wish you all the best for that as well.
Thank you very much.
Mr. Bakeri, thanks so much for joining in, and all the best for FY19.
My pleasure. Thank you very much.
And viewers, that's Achal Bakeri. Expressing confidence. I think I heard him mention that 20 to 25% growth. They're not shying away from projecting that. But let's wait and watch what happens. First quarter promises to be a soft one as well, as they've already laid out in their transcript. No wonder the market is taking note of that, and maybe which is why the multiple, it may not be essentially as much of a reaction only to the numbers as much to maybe the multiples as well, but the management confident a new acquisition will, if it goes through, will add substantially the top line and the bottom line as well. Let's wait and watch for that. We'll get the answers in 2 weeks' time. Thanks so much for tuning in.